Hey, what's going on, everyone? Today is September the 30th, 2022. I wanted to talk to you all about this article from CNBC. You guys can see that the title reads, Stock Market Losses Wipe Out $9 trillion from Americans' Wealth. This, if it continues, will definitely impact the economy because people begin to think differently once they see their assets dwindle, get smaller and smaller. They begin to become more conscious as to how they spend their money and where is it going to go, which is going to translate into whether or not these companies that have stocks, publicly traded stocks, are going to be impacted on their earnings and how much revenue they're going to bring in. It's all a circle. I want you all to see this. So this article came out September 27, 2022, and you can see from this particular paragraph that falling stock markets have wiped out more than $9 trillion in wealth from United States households, putting more pressure on family balance sheets and spending. This is going to impact the stock market. Putting pressure on the individual consumers and families is going to impact how these other businesses will continue to make money. I mean, if you guys have noticed, that is why so many of them are freezing hiring. They're laying off their employees because they're getting prepared for this. Once the consumer alters their spending pattern, businesses will follow suit too. They're going to come in and alter how they operate as well. America's holdings of corporate equities and mutual fund shares fell to $33 trillion. Prior to, it was at $42 trillion. $9 trillion difference. Now, this is according to data from the Federal Reserve. People are losing out. People are losing money because they have been told that you want to keep these stocks locked up, right? You want to keep your money in these stocks for 10 years, for 15 years. And you guys can see the reverberations, some of the result of you doing that. You lose your money. When the market was reaching all-time highs in 2020, 2021, that is when you should have been taking the bag and placing the money in some other attractive assets. But now you guys can see that if you continue to just sit and keep your money in stocks, that $9 trillion in wealth already gone from household is going to increase. And it's going to be a headwind for the economy because people are going to start taking out the money from those stocks, out their accounts, out their 401ks, and using it for expenses and daily living because the cost of inflation is rising for food, for commodities, everything. But the wages is not going up. So how else can you pay for the things that you need? Oh, okay, I need to take or withdraw some of my funds from my 401k, my IRA, or some of the stocks that I hold. I got to leave it. I got to let it go because I need the money. This is what this article is leading into. Now, economists say the drops could soon start rippling through the economy, adding pressure to American balance sheets and possibly hurting spending. It's not possibly, it will. If people continue to look at their accounts and they see it dwindling and going down and going down and going down, it places a fix on your mentality. It makes you think differently. In 2020, 2021, everything was euphoric. Everyone was excited. Everyone was talking about we can't go down. The market will always go up in price. But then you hit the real and you're looking like, dang, my account is dwindling. Now it's time for me to start paying attention to the market. It's going to hurt people's spending, borrowing, and investing. This is what Mark Zandi, he's the chief economist of Moody's Analytics. He knows that $9 trillion is nothing to play with. Now, he goes into saying that the loss of the stock wealth, if sustained, will be small but meaningful. Now, how can you have a sustained loss of wealth, but it will be small but meaningful? I wish you would have went into that a little bit deeper. Now, a lot of the wealth, according to the Federal Reserve, has been from the top 10%, right? You guys can see right here. The top 10% of Americans have lost over $8 trillion in stock market wealth this year, which marks a 22% decline in their stock wealth. The top 1% has lost over $5 trillion, right? The bottom 50 has lost about 70 billion. Now, just because they try to segregate the Americans into how much wealth they lost, $70 billion is still a lot for that 50%, right? So let's not try to minuscule and minimize that. This is what the article is trying to do. They're trying to hit the brunt of the stock market wealth loss to the top 10%, the top 1%. But the 50%, 70 billion is nothing to play with neither. Like, these are individuals' hard-earned money that they worked for, that they have been told to put into an account so that it can accumulate. And when you see $70 billion of that wiped out, yeah, that hurts, especially those who are nearing retirement. The losses mark a massive and sudden reversal for shareholders who saw record wealth creation from soaring stock prices since the pandemic. From the market lows of 2020 to the peak of 2021, America's stock wealth nearly doubled from 22 trillion at the beginning of 2020 to 42 trillion. The bulk of that wealth went to those at the top, since the wealthiest 10% of Americans own 89% of individual held stocks, according to the Federal Reserve. Yeah, but some of the retail market also grabbed in some of that record wealth. Some of them rolled the wave too. And now everyone's going to ride the wave down. Okay. So the drop in stock wealth also far exceeds the 6 trillion in quarterly stock losses during the beginning of the pandemic. While stock markets have seen larger drops on a percentage basis, this year's stock losses are among the largest ever on a dollar basis. The big question is how much the stock declines will impact consumer spending. I told you that earlier. So far, there are a few signs that affluent consumers have cut their spending. Yet some say the negative wealth effect, the theory that wealth declines lead to spending declines, could soon start to bite, especially if market declines continue. So they're not worried about the bottom 50, 70, 80%, whoever makes up the bottom percentages. They're not worried about them because your consumer spending is already affected, right? It's already being impacted. They want to see what the wealthy are going to do. Are they locking up their wallets and being more attentive to how they're going to spend the money? Once that occurs, because if you have no disposable income, which is the bottom, whatever percent, 50, 67, 80%, then you're already limited on what you can do with your access of funds. But the top percentage of individuals who have a lot of discretionary spending, if they begin to lock up their wallets and not spend, that's going to reverberate across the economy too. So where else can you go? How else can the economy begin to flourish again? Well, it has to go back to the Federal Reserve. They need to come back and spur more printing, buying more government debt, loosen some lending requirements so that you can get the economy moving again. But right now they can't do that. The Federal Reserve is on a tightening cycle. And until this breaks, until they reverse course like the Bank of England just did, the stock market is going to continue to go down. All right. So I just want to give you all this article real quick. Just give you my thoughts, my perception as to what I think it means and where we're going to go. Give me your thoughts. Make sure you maintain the profitability. And as always, trade different.